Hello, this is the Chartprofit webcast. Friday 27th of November, we're approaching about 2.5 hours into the shortened trading day. This from the pre-open today. The last clear sign of significant buying and selling, or selling, was here. Aggressive buying back on the 18th. Intraday it was showing buyers active, these numbers at the bottom here being positive, and we had a higher wide value area on that day showing the buying was effective. Price action since that point, this sort of consolidation area up here has shown, or certainly hasn't shown, any conviction from the significant sellers. This probe on Tuesday down here to the previous 5-month point of control at 2063 was bought early by the buyers, and we quickly auctioned back up. So this period here just looks like buyers resting, looking for a response that so far they haven't found from the sellers. I've also seen that point of control, that 5-month move up to this point here, 2087. Just above that price at 2094 we have the major point of control. So here on the half-hour chart, 2063, the previous support down here wasn't even tested, but so far this major up here, 2094, has not yet been exceeded. It was just tested over here, and I'd be looking for price printing time above that level before looking at new longs at these levels. But so far, as I say, there's been no real conviction or markable response from the sellers. Looking at the daily breadth chart for New York, these bottom two indicators just creeping above their important levels. We saw an improvement back here early October when both got above their respective levels, and then this dip in here. We're back in readings now that give us this green on the breadth. You can see it all on the chart here for the spider. So the point of control up here, 209.90, is very clearly resistance at the moment on the spider. This has improved. The momentum, price momentum, has dipped down to 0 here, and we're just currently printing below 0. So price momentum picking up back above 0 would be a positive sign, and time up here would, at that point, I'd be thinking higher. It's good to see the small caps picking up. This is the Russell 2000 ETF IWM, just breaking out to a new higher for the move higher from this low. So this is a 3-month high. Most importantly, we are now printing above the halfway point here. Quick look at the European markets. This is the FTSE 100 index, the halfway point, which has been stubborn resistance, still above us at the moment. This chart, along with the Russell 2000 ETF, was our previously were our key charts. It would be good to see the UK confirming, and price above that level would be a positive. That's roughly 64.50. The 8-month point of control has just migrated higher this week to 63.35. FTSE has closed the week above that level. And here's the December FTSE futures, the 8-month at 63.36. Here closed, or will close above that level, and the halfway point again, which has been resistance, just above us. Price here even better, above 65.20, which is the major, would be real positive for the UK. German DAX index now printing above its halfway point and above its 12-month point of control, which has just migrated up to 10.936. And in fact, this halfway point was support this week, so we've now had a higher low at the halfway point. Hopes for further quantitative easing, pushing the DAX up to close to a 4-month high here. And as long as it holds above this level, it's in a strong price location now. And very similar looking chart for the December futures, with that higher low on the halfway point, and the 12-month 10.965 just migrating to that level this week. Some of the sentiment indicators data has not come through yet. I'll show what I can. My version of the Ridex assets ratio was higher on Wednesday to 7.7, which is right here on the chart. Certainly room for this ratio to move higher. We've seen levels above 14 this year. If we break it down and look at the bull fund assets that I follow in isolation, you can see that from the assets low in September, there's been quite a rise. So a lot of public money coming back into these bull funds in the Ridex platform. Since 2009, these are the only levels higher than the current reading. The reason the ratio isn't rapidly moving higher as well is just the fact that bear fund assets over the last week or two have also been rising pretty quickly. If I look at the total, that's all the assets of the Ridex funds that I follow. So this being Ridex assets total assets. Found that when the assets are historically high, it's usually not a positive sign for the market. Again, going back to 2009, this is just about the only readings that we have above the current level. Just to show you the opposite side of that coin, this is over the last 3 years where the total assets got very low. So breaking down the Ridex data, seems to be indicating quite a high level of enthusiasm for the market, even though the ratio itself is relative to recent ratios over here this year. Current one doesn't look too extreme. Do have data for the public poll from the AAII. Can't say it's very enlightening at the moment. Bull percentage was higher at 32.4, bears percentage was lower at 26%. And the money managers, the exposure index, that was higher at 70.45, and that's actually the highest since June. Let's quickly run through some of the other charts. This is TLT, the T-bond ETF, has stalled this week at the 12-month point of control here. Price above the halfway point from the June low, which comes in just slightly higher, about 122. So price in here would be a much stronger price location and indicate higher. 7 to 10 ETF, which is IEF, and the halfway point from this low to this high comes in here, and we're just about printing at that level currently. Price above 106.60, the 18-month in here would be again stronger price location and indicate higher. As you recall, this was a strong low here right on the major point of control support at 105. USO, the United States Oil Fund, consolidating here in a short-term weak price location below this halfway point, which usually indicates a test of the previous low over here in August. If we look at a monthly chart for crude futures, the low that we've had this year, it's just a little test below this level here, which was the low in 2008. We're looking back to the daily chart. See this August low on the futures. It's a really important reference point. Price below that level, as we've just seen, would be really weak. Be interested to see two things. One, if we see a test of the August low, just be interested to see if this chart snaps back. If it doesn't, that would indicate lower. Or if we see price actually generally moving higher over the next few days, weeks, and we see price doing this, giving us perhaps an obvious kind of higher low. I just think possibility of base building here, and I think either of those two scenarios would probably indicate higher. Time spent below here certainly wouldn't. This is gold, cash gold, showing a monthly chart here all the way back to the 1980s, and we're looking at the big Gann halfway support from this low to this high was support. Comes in here. We said back in July when gold found support at that point in the ebook at that time I was making the point that this was a very good level to find support, and certainly price below that level would be extremely weak, and that's where we are now. So I'm certainly not looking at the long side of this chart until either we've gone lower or we've recovered. But currently on any time frame, this chart looks pretty weak. Dollar index certainly looks as though it wants to test the March high. You can see here on the weekly it's an important high, with the euro looking like it wants to test the March low. Euro FX chart. Remember this weak consolidation in here, this low to this high. There's the half, and there's the support, and there's the resistance. Pound dollar also in a weak location below its half of the April low. Actually just printing a new low today, the lowest since April. And as we said previously, the Aussie dollar actually not as weak as the previous two charts over the last 3 months, and currently holding its halfway off the September low, and maybe building a base here. We need to follow this chart closely, especially in light of the move that we're seeing in gold at the moment, and I'll be watching the shorter term sort of controlling prices, which are likely around this level here. Just interested, this chart seems to be holding up better than others against the dollar here. Okay, that concludes. If you're taking a few days break at the moment, I hope you're enjoying it, and once again I thank you for watching.